Imagine earning money on Bitcoin without owning a single coin. Sounds incredible? Today we'll explain how this is possible thanks to the Bitcoin ETF. The Bitcoin ETF is one of the hottest trends in cryptocurrencies. Why is everyone talking about it? What could it mean for you? In this video, we'll analyze how this new instrument can change the game for investors. Hello, I'm Eva, and today we begin a series of 5 videos about Bitcoin ETFs. I'll show you why their launch isn't just news, but a real opportunity to start earning on cryptocurrency without deep knowledge or large investments. Think of Bitcoin as a precious metal, like gold. Buying gold requires storage, security, and selling it isn't simple. But what if you could invest in gold without physically owning it? That's the essence of an ETF. You don't directly own the asset, but you benefit from its growth. In June 2023, investment giant BlackRock filed an application for a spot Bitcoin ETF. It was like Rolls-Royce releasing a budget car model. All investors' eyes were on this event. Bitcoin soared to $30,000, and analysts discussed the market's potential at $100 billion. It's like predicting a real estate boom after opening a new megacity. Let's break down what a Bitcoin ETF is. Imagine a basket of apples. Instead of buying each apple, you buy the whole basket. With a Bitcoin ETF, this basket is a fund holding Bitcoins, and you buy a share of that fund on the exchange. No worries about storage, security, or transfers. The fund operator handles it all. Here's the best part. You don't need thousands of dollars to buy a whole Bitcoin. You can invest a small amount, buy several shares, and watch them grow with Bitcoin's price. Need money urgently? Sell your shares easily, just like Apple or Tesla stocks. What other advantages do you think a Bitcoin ETF could offer regular investors? Share your thoughts in the comments. Subscribe to our channel and hit the bell icon to catch the next part, where we'll dive into how a spot Bitcoin ETF works. See you in the next video.